Good afternoon and welcome back to another year of FBAR fun. Each year we try to provide a summary of what needs to be done for the FBAR Foreign Bank and Financial Account Reporting, and we're already into 2024. The filing year has pretty much begun. So let's talk through some of the basics: the due date, the filing requirements, the deadlines, the nonsense you've read online, penalties, avoidance, and amnesty. 2024 FBAR, unless there are some changes that are coming in the near future, FBAR will look the same. It's FinCEN Form 114, Financial Crimes Enforcement Network, but it's not typically a criminal scenario. Even though it's a FinCEN form, since 2003, the IRS has been tasked with enforcing it against all you wonderful taxpayers. U.S. persons have to file the FBAR. That includes individuals, entities, and trusts, but the focus of these presentations is primarily individuals. It can get much more convoluted and complicated when dealing with entities and trusts. Essentially, if there's more than $10,000 on any given day of the year, the FBAR needs to be filed. It's not per account, it's an aggregate total. So you've got one account with $47,000 in it and 22 accounts with $300 in them each. You still got to file it and report all the accounts together on the FBAR. The FBAR includes more than just bank accounts, even though that's the most common type of account you'll have to file. It includes savings accounts, investment accounts, stock accounts, pooled fund accounts, other investment type of accounts, pension accounts, retirement accounts, and life insurance when there's a surrender value. In other situations, you have to be careful of ULIP, unit-linked insurance policies. The FBAR due date is still currently April 15th, but it's on automatic extension, so the deadline is automatically extended to October. You don't have to file a 4868 or 7004. It's automatic. The FBAR is filed online, FinCEN Form 114. It's filed directly on the FinCEN website. And if you're certain spouses in other situations that are filing together, you also prepare a FinCEN Form 114 little a, but it doesn't have to be filed. With the FBAR, it's not a test. You're not trying to get 100%. The goal is to do the best you could do. It doesn't have to be perfect. So what that means is, if you're missing some information here or there, it doesn't mean you just don't file. You do the best you can. There's actually a box you can mark that says maximum amount unknown, so the IRS or FinCEN is aware that you may not have all of the information. You also want to avoid a quiet disclosure, which means you just learned you have to report, and you should have reported in prior years. So either you're just going to go back and mass file these FBARs. I've had people come to me and say they did like 20 of them. The statute of limitations expires after 6 years, but don't do that. There's various programs, and we'll get into that, but you don't really want to just file going forward. You don't want to go back and file without going through the proper protocols, or you could set yourself up for a situation you may not otherwise be in. There are plenty of people who did acquire disclosure, but they could have done streamlined foreign or delinquent FBAR and not had any penalties anyway. If you didn't report the FBAR timely in prior years, various options and things you could do and things that may happen. It could be nothing. The IRS they never got to you, and you never did anything, and they never found you. I cannot give that advice. My firm cannot give that advice, but I'm sure there are plenty of people who do nothing and nothing happens to them, right? The lucky ones. I'm not like that in life. Most people I've met are not like that, but some people just kind of skate through, and good for them. You might get a soft letter. A soft letter just basically says, hey, we have this information. You haven't been audited or penalized yet, so go fix it. You should take that as a warning to fix it before something else happens. Or you may get audited, or penalties may be issued. If you're under audit, you should speak with an attorney, board certified specialist. If you've been hit with penalties, then you got to kind of work through the different options. You typically can't go to tax court because it's not a tax form, but you should see what your different options are. Willfulness and non-willfulness, you'll find globs of information about this online. Most of the time you're non-willful. Some people are willful, but a majority of the time you'll be non-willful. Civil violation, $10,000 per year, typically up to 5 or 6 years. And with willfulness, it's a little bit different. Oh, with non-willfulness, I know what I was going to say now. There was a Supreme Court case, Bittner, in 2023, which basically says that the IRS can only get you for $10,000 per year, not $10,000 per account per year. Willfulness is 50%, typically up to the total value of the account over a multiple year period. Criminal is different, right? With criminal, there's potential incarceration and other monetary fines and penalties. But the thing to keep in mind is with criminal, there's normally other aspects to it. It's not like you didn't report the FBAR for a year or two. Willful blindness, reckless disregard. It's a different standard when it's criminal. Typically, it will include other issues such as money laundering and structuring and smurfing and all that kind of stuff, evasion, fraud, not just you didn't report the account. It could happen, but it's not common. If the IRS does end up getting a judgment against you, they can get a lien, they can get a levy, they can seize your assets, U.S. and foreign. It's hard for them to get the foreign assets, but there's lots of agreements with different countries, and so the IRS does work together, the U.S. government does work together with other countries, but it's typically not the first thing that they do. If you're out of compliance and you're looking to get into compliance, there's various options available to you. If you're willful, then the voluntary disclosure program is essentially your only option. OVDP merged back into the traditional voluntary disclosure program back in 2018. So whether it's domestic or offshore, you do it under VDP. If you're non-willful, you have a lot more options available to you. You've got the streamlined procedures, you have delinquency procedures, and you have reasonable cause. We have a ton of free information available on our main website and our sub-website. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter and something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Have a nice rest of your day.